Hello guys, can you guys hear me? Type in the chat if you can hear me. Okay, good. Raymond, hello?
Okay, what time's the alarm for?
Oh. Abjeet, hello? I hope I said that right. Okay, can you see my chart? Okay, perfect. Hello, Peter. Joanna. Abjeet, okay, that's good. Johan, hello. Raymond, Raymond, if it doesn't show up for you, can you try to log out and then log back in again? Maybe that's going to fix it. Thanks. Okay, RV. Yep, that's a lot easier. Okay, so this webinar is going to be recorded. It's actually started recording already. And we're going to post this and we're going to send it to you guys after the webinar as well, so you guys can always have it whenever you need it. I just have a couple of quick questions. The first one is, did you guys receive the emails yesterday about the products and where to download them and everything? Okay, that's Bob. Johan, yes. Avi, yes. Diane, yes. You are yes. Okay, perfect, perfect. Now, I asked this because some people said that they went straight into the spam folders. So I was going to ask you guys, if you didn't receive them, to check your spam folders just in case you didn't see them. They're definitely going to be there. Okay, so everyone else besides Peter installed? Bob, yes. Okay, that's good, Raymond. Diane, yes. Johan, yep. You were yes. All installed and I like. Good, perfect. So the install instructions were very straightforward. I'm guessing if you guys all installed, that's good. Okay, so today, basically I'm going to do the course outline first of all. I'm going to tell you guys about the course, and then we're going to move on to the course, and then after I'm going to do some demonstrations on the indicators and the indicator suite, depending on what you guys want to see. So because in the NinjaTrader webinar, I only got to show you as much as NinjaTrader let me because the time was very short. This way I can show you everything that we can do, and you guys can ask questions, and I'll demonstrate everything for you. Okay, so the course outline. Okay, Gary, if he's got no sound, give me 2 seconds, guys. Raymond, what browser were you using before? You still with us? No, Raymond's gone. Okay. So the course outline. So the course outline, I'm going to go through 10, you guys are going to get 10 different videos taking you from the very basics, which is the ebb and flow of the market, to finding structure. After you find the structure, how to intensify that structure with the Ray balance. Then we're going to move on to drawing trend lines and trend channels. And then we're going to move on into the RayTrader system that we designed for you guys. And I'm going to show you how to trade that from start to finish, including entries, stops, targets, and next week you're going to receive the back testing that we did for you guys, so you can see the trades, all the historical trades. Now, altogether, there's about 200 trades over the course of a year, so it's roughly ends up being about one trade a day. Now, we didn't trade, or we didn't test over Christmas, but I'll get more into that once we get to that point. Okay, so this today we're going to talk about the ebb and flow of the market, and then we're going to talk about market structure. Now, the market structure video is going to be sent to you guys sometime today, but I'll cover it in here, and then you can watch it after as well. How many of you guys actually seen the ebb and flow video? Okay, good. Was this a new concept for you guys, or you've seen this before? Okay, good. I'm glad that works, Gary. Raymond, sorry. Okay. Of course. It's good that it's not new to any of you guys, because these are really just the very basics, and I want to enforce these before we move on forward, just in case some people don't know about the ebb and flow of the market, because I think that the basics are just the most important. Once you build on, if you build on a rotten foundation, well, everything's just going to collapse. So that's why I want to strengthen the foundation and then move forward onto what we're going to do. Okay, so let's see, Gary still hasn't responded. Okay, so first of all, we're going to talk about the ebb and flow of the market. Now, as I mentioned in the video, the ebb and flow of the market is really just the movements of the market going up and down. I'm going to use the crosshairs. So basically, it starts off at a low, it creates a lower high, higher low, higher high, higher low, lower high, higher low, and so on. This is an uptrend, and then if we move, we try to find a downtrend, it's lower low, lower high, lower low, lower high, lower low, and then it switches. The best tool to do this with is the Ray zigzag. That's why we built it, so you can see exactly where the lower highs and lower lows are for each time frame separately. Now, we normally use the Z2 because the Z2 really allows us to see our current time frame. Excuse my phone. The Z2 allows us to see the current time frame that we're trading on. This is the most accurate, I think, for drawing Ray lines or drawing trend channels, or just really anything that has to do with lines of the highs or the lows of structure. The Z3 obviously shows us a more lenient time frame. We call this the higher time frame because it shows us a more trending market direction. So this really shows us the real highs and the highest highs and the highest lows. So real lean market movements. As for the Z1, really, you must really zoom into this one to actually see what's going on. And you can see it's like one of those printers in the old days where they used to just use a needle. It looks like someone. It looks like someone's EEG, you know, like the heart beating. So it's very, very, very fast. So that's really all there is to know about the ebb and flow of the market. Now, I'm guessing since you guys already knew about this, you didn't actually spend the 30 to 45 minutes looking at the ebb and flow of the market, right? Yeah, thought so. Okay, now we're going to talk about structure. Since I'm guessing, as I said, all of you guys are familiar with market movements and the ebb and flow of the market. And how many of you guys know about structure, resistance, and support? Okay, so it looks like most of you are. Okay, so what I'm just going to quickly run through it. So there's two types of structures. There's support and resistance. Support is normally when support is created by a low, like this sort of thing. And what we normally like to do is some people like to draw lines for support, like this one. Actually, this isn't very. We'll just use dark olive green and we'll make this. There we go. So this is support. Some people like using lines. What we like to do in most situations, because the market is not really 100% exact, what we like to do is we actually like to draw a support zone. Now, from these three lows, you can easily tell that the support zone is somewhere around here. And obviously, price didn't come back to this level. I chose a poor level, but we like to draw support zones. Now, support is actually defined as when price action is above it and it touches it and then it bounces off it. That's what creates support. Now, resistance is the complete opposite. It's actually a high. And I'm going to draw the zone from here to about there. Now, as you can see, if we would have chosen just this high, as I was speaking before about this, as if we would have chosen just this high where my very thin blue line is, I'm going to make this thicker just so you guys can see it. So where my blue line is, if we would have just chosen this line, you can see that price came back, drove through it, came back, drove through it, and then bounced off it. That's why we like choosing a zone, because as you see, we've chosen this zone to the left from these highs. And as you can see, price actually came within the zone, broke it by just a little bit, by looks like a tick or two maybe, and then just bounced off it. So a zone is more accurate than a line. So resistance can also become support. So once resistance is broken and price is above it, then it becomes support. So as you see in this sort of scenario, this was newly found resistance, then it put in support, then it comes up, breaks the resistance, retests it as support level, and then it just bounces off it. Now, these would be major support and resistance levels. Now, these major support and resistance levels at one point or another, they will turn into minor support and resistance levels. Right, so we can see that this one actually stayed a major support level and then just completely bounced off it and went on to new highs. What I mean by minor support and resistance levels? Well, a minor support and resistance levels would be this, where price actually comes in, and I'm going to make this thicker again, where price actually comes in, it bounces off it a few times, then breaks it, then bounces off it, breaks it again, retests it, bam, breaks it again. So basically, it's a level where price actually turns, but it doesn't completely turn from that level. You can see the difference in between this bottom level, this yellow one, this support, this resistance zone that got turned into support. When price bounced off it, it bounced off it. Now, off this median level or this, off this level, basically it just bounced off it a few times, then broke it, then broke it, then broke it. So it's still a good level to where price returns to and then bounces off, but it does get broken quite frequently. That's what I mean by minor support and resistance levels. And obviously, again, this would be a zone something around this, like that. And we'll make this orange. There we go. Okay, and that's really all there is to know about support and resistance levels. Now, I'm going to ask you guys, and obviously the people that are very familiar with this and have done this for a while, there's no need to do it, but I'm going to ask you guys to actually spend 30 to 45 minutes and actually try to see and find these support and resistance levels, because this really is going to help you to better understand the market. Okay. Okay. Now, this was all the teaching that I wanted to do for today. This is really the basics of the market. Tomorrow we're going to get into confluence and actually, you know, adding the Ray balance to strengthen these support and resistance levels. But with this webinar, I just wanted to, this exact one, this first one, I just wanted to quickly run through the ebb and flow of the market and the support and resistance levels. Yes, I am, John. I'm recording these. And then I wanted to see any questions from you guys to see if what you guys want to know about the indicators or the indicator pack, or if you had any trouble installing, if I can help you guys and answer some questions about it. So first one in, which indicator do you guys want to have a look at? The trend bands. Okay. Trend. Ray trend is here. Okay, so the Ray trend, you put it on a chart. Right now we've got it set to 48. So the Ray trend, we've got this set to number of ticks total is 48. We've got the band colors, blah, blah, blah. Did you guys see the videos on how to use them? Okay, good, perfect. Okay, so the Ray trend, we've got it set to 48. We found that in day trading, 48 ticks is just fantastic. Also, I'm not sure if I mentioned this in the how to use videos, but this number is actually a multiple of 8. So even if you put in, if you put in 56, that works. If you put in 56, that works. But if you put in 53, for example, it's just going to automatically move it to 48 or 56, which 48, so because it always takes the lower value from that, just as a heads up. Okay, so the Ray trend. Basically, the Ray trend is a trend direction tool. And this trend direction tool, when price is breaking the lows, like in this sort of, actually we'll find something more aggressive. So like in this sort of situation where price is actually pushing the lows down, and as you can see, all the shaded areas are moving down as well. As price is pushing these areas down, we can safely say that we're in a downward trend. Then when price retraces, it normally retraces in between the mid band, or actually it touches the mid band, or at the highest point, it retraces to the top band. Now, this is a deep retracement when it retraces to the top band. So we were in a downtrend, then the trend actually changed into an uptrend. Now, to spot the uptrend, basically, it's just the band being pushed up continuously. Do you guys have any specific questions about this? So the number setting, Raymond asked if to explain the number setting, if it's the average range of something. It's not actually the average range of something. We actually have I found tick or range charts to be better. We actually use the tick charts, and we use the tick. Sorry, Raymond, I'll be back with you in just a second. Jordan asked if we have the tick or range charts better. I like the tick better because it shows us more action during the day, and this works with the Ray system quite a lot better than just minute bars. But that's just a personal preference. Really, you can adjust this to whatever you want. Explain the number settings again. Is it the average range of something? So this basically is, since we're using tick charts and we use this on the ES continuously, the average range, the ATR on the ES normally ranges in between 2 and 3 or 4 at most. So we just multiply the ATR value by like 20. And that really just gives us a smooth range of movement. I hope that explained it. If it didn't, please let me know. Yes, Ajit, we will cover using the bands. Actually, what we're using these bands for is not the actual entry itself, but we're using them to gauge trend direction, and we're using them as a filter. When do you consider the uptrend over? Where is it? George, when do you consider the uptrend over? Is that a breach of one of the lines? The uptrend I would consider to be over when let's say we're trending up, like in this sort of situation, and price actually comes down and breaks this value and starts pushing the lower band down. That's when I would consider the uptrend to be over. Now, in very fast moving markets, this might happen where it just comes and touches it. I would say that an uptrend would be over when, like, for example, on the NASDAQ, what was it, 6.75 points? When, let's say, for example, so we've got this set to 48, right? So that means I would say that an uptrend would be over when the downtrend moves 24 ticks, when it pushes the line lower by at least 24 ticks. Otherwise, it might actually come back and retrace, like in this sort of situation. See where it just pushed down, and this was really just a small retracement, or small-ish retracement. Okay, Raymond says he's been testing 48, 64, and 96. Okay, for appearance. This really comes down to what you guys like for trading. Our motto, well, not motto, but our theory is for trading is really, it has to be tailored to every single person. My risk aversion might not work for your risk aversion. I might like to risk more, you might like to risk less. I might take larger targets while you might feel better by taking smaller targets. So really, this is tailored to, trading should be tailored to what you guys feel is best. And testing is the only way to actually find your sweet spot? Diane says it's very interesting to see how price stair steps whilst adhering to the lines. The lines become their own support and resistance lines. Yes, that is very true. And of course, like any support and resistance, they're not always exact, as you can see. Sometimes it's a tick difference, sometimes it's more, sometimes it's even less, sometimes they get broken, but still, they are very, very good indicators of potential support and resistance. So if volatility increases, we adjust the setting as a multiplier of ATR. In the testing, John asked this. In the testing, we found that adjusting, well, this is really for the Ray system, but you can adjust it for as a multiplier of ATR. What we've actually found is that it actually works better within ranges. So we have a range in between 1.5 ATR to 3.5 ATR where we use 48, and this is completely on the ES, where we use the 48 value. Once it goes over 3.5 ATR, and this is a 7-period ATR on the 1500 tick chart. Once it goes over 3.5 ATR, excuse me, we like to multiply that number, the 48, by 1.5 times to give us a little bit more room to breathe. Really, this came from testing. Raymond asked, is there a swing setting to set in the code? What do you mean? Can you please elaborate on that question, Raymond? How do you offer one asked, how do you prevent trading in consolidation markets? The Ray system that we're going to teach you actually only trades after the market has trended. So that means it's going to catch it's a counter trend system. So that means it's going to catch either the start of a consolidating market or the complete switch around of a market. So you're going to see that next week. I'm going to show you exactly how all that works. I'm waiting for people to finish typing, so yep. Does it work like a fib swing indicator? Can you elaborate more on that, please, Raymond? Okay, Avi said, like the testing figures of the ES-ATR and the method to set the indicator, are there similar test studies available on the NASDAQ and the CL? No, not at the moment. Right now, we've just focused completely on the ES. We want to start so basically any new trading system, we don't like starting we don't like starting you guys on any new trading system with 4 different charts at once. What my personal opinion is, you have to learn to trade off one chart where you just sit and stare at it and get bored, rather than trying to stare at 4 charts. This is basically like Ray's problem that we mentioned, and not Raymond in the room, Ray in the what the RayTrader is actually based off. He was trying to trade too many charts at once, and he missed some signals. Now, that's why I said we start off with just one, which is the ES, and then we can move on to other ones as well. Does it work like a fib swing indicator with anchor? What do you mean, what are the bands made of? The top band, the bottom band, and the middle bands? Okay. The top. So each band is actually a division of the number of ticks. That's why it's a multiple of 8, because we have 8 bands. So it's basically grabbing the distance, which is the 48 ticks, and it's actually splitting it into 8 different 4-tick bands. So the top band really is the extreme. So Diane just said that she just ran a fib from the top band to the bottom, the whole 48 ticks, and it shows the standard fibs. There you go. Oh, okay. The ATR, we actually, this is a manual thing, so it's not actually using the ATR, so it's always set at 48. But we used the ATR on our screens to actually test, to actually test what the best values were, and we used a 7-period ATR off the current time frame, which was a 1500 tick ES chart. Now, again, if you move this to a minute chart, then you will have to adjust these values because the minute bars look a little bit different. And we'll get into that in the further courses. Okay, any other questions on the Ray trend? Okay. No questions. Okay, what other indicators do you guys want to have a look at? Okay, the Ray balance. Okay, let's have a look. So I've got it set up on the ES chart with the Ray balance. Okay, so the Ray balance, I'm just going to quickly run through, seeing it on the chart, and then you guys will go through questions. Okay, so basically the Ray balance is the initial balance. It starts, I've got mine set at 8:30 in the morning to start, and I'll probably need to move this a little bit higher. So I've got mine and 25 different fibs. I've got mine to start at 8:30. The session length is 1 hour, and it's the total number of days. So basically, this is a fib extension tool that works off the initial balance of each day. So the initial balance you get to set up, which is the 8:30 to 9:30, what we've got set now. It draws the highs and the lows, and then it extends the fib upwards and downwards. So as you can see, you get completely obliterated with fibs. Now, what we use this for is when we draw support and resistance levels historically, we use this to strengthen the support and resistance levels. Now, to strengthen them, basically, we turn on as many of these and we try to see where they intersected, where as many of these intersected as possible. So as you can see right now, and it gets extremely busy when you turn all of them on. That's why we have on and off buttons. So as you can see in this sort of situation where we had the 88.1, you can see that we had 4 fibs, and 2 of them were derivatives of the 61.8. So that's 361.8, 361.8, negative 150%, and 88.1%. So all these 4 joined in one and actually gave us a support level. Now, this really is just me showing you how this works, but normally we would grab the historical levels and then we'll add them to the chart, and then we'll see to strengthen them with the fib extensions. And I'm going to turn these off. Now, this tool is really awesome for back testing as well, because if you scroll back, day 0 actually becomes the current day that you have selected. And day 1 is the previous day to that you have selected. So this is really, really good for back testing as well, because you don't have to adjust the days back. So it doesn't show you just live data, it actually shows you the historical data as well. Alrighty, questions? Can you please elaborate, Diane? I didn't understand what you were asking. Does anyone else have questions in the meantime? Yep, there we go. That's all right, Ron. Everything's recorded, so you should be fine. You're going to get the recording after the webinar. Oh, yes, Diane. Yes, that's right. So it shows you today's and yesterday's, even as you're scrolling back. So it's not just today, any value that you've got set, as you're scrolling back and the day changes, it also changes with it. Yes, John. You can adjust the initial balance. It's actually in the settings. You can adjust the initial balance value to whatever you want. So instead of having just 1 hour, you can set it to 2, for example. And then you click OK. And I'm going to show you the current day. So as you can see, the current day is from 8:30 until 10:30 in the morning. And you can set this to whatever you want. And you can set any start time that you want. All you have to do is just adjust the settings. But that adjusts the settings to all of the zones, all of the initial balance zones. I'm not sure. Offer said, I'm not sure I understand how to prevent taking trades in a non-trending market. Can you please show again, how do you see a non-trending market? And if you guys still have questions about the Ray balance, write them in now, and I'll try to do my best to explain to Offer what a non-trending market is. So basically, a non-trending market is a market that would jump in between like this sort of thing. Okay, so price gets pushed down, comes back, pushes up a little bit, and then comes back down, and then pushes back up, down a little bit, and then comes back up. Basically, this would be a non-trending market. Now, to actually see a non-trending market, you're probably going to end up seeing the market somewhere around, let me find the vertical line. I think this is it. You'd probably end up seeing the non-trending market when it's somewhere around here. To take trades in a non-trending market, I would suggest that either from a downward push, you wait for an upward push, and then maybe wait for a mid-band touch or a mid-zone touch, and only take trades in the trend direction of that. That's why I try to explain it's not really an exact science just to use the Ray trend for trading in a non-trending market. This helps us, but this is just one tool in the toolbox that we use to actually put on a trade. We actually use more tools for that. And as I said, we're going to go through that next week. John says, you could paint the background to initiate up, down, or neutral trend. You're welcome, Offer. What do you mean by that? Oh, this background paint, this is just from the time zones itself. So I know when my trading time is. So this is the indicator that is actually painting the backgrounds. It's just a time zone indicator, basically saying that I'm going to trade from 8:30 in the morning until 1 p.m. in the afternoon. And then from 1 to 15:45, it's a dead zone. And then it's completely overnight. So Diane was saying she actually spotted how the market was just bouncing off the fib levels. That's actually very, very interesting to see. Bam, as you can see, it just jumps off the fib levels. Of course, not all the time because the market's not 100% exact, but it's there. Ron, yes, in the testing that we've done, we actually have the exact targets, the stops. So we're going to, by the end of these 2 weeks, you guys are going to have a complete trading plan that you can just start trading in the market. Obviously, I would recommend that you guys test it as well. Always test, because you need to get used to actually seeing the signals themselves. Okay, any other questions about the Ray balance? And if you guys want to see any other indicators? Okay, Bob said no thanks. Just wait for the other 2 people to stop to ask their questions, and if no, then we'll wrap it up for today. And I haven't had a chance to look at it yet. Moving office around. Oh, okay. Well, I'm guessing you've got the emails, Ron. Yes. If you didn't, check your spam folder. Okay, good. Raymond's typing. We're in Romania right now. Okay, so for tomorrow, we're going to talk about, let me find my course material. Okay, so tomorrow we're going to talk about, yes, same time tomorrow. Yes, you're right. So tomorrow we're going to talk about market structure and market trend, even though we did cover them today, but they were actually supposed to be for tomorrow. And we're going to talk about market confluence and how to actually use support and resistance levels with the how to strengthen the support and resistance levels with the Ray balance. And obviously, if you guys have any other questions on how to use the indicators or anything like that. Yes, yes, Avi. All these sessions will be recorded. I'm actually recording this one right now, and they should be uploaded to YouTube on the same day. Okay. Well, do you guys have any other questions, or is it okay if we wrap it up for today? All right. Well, thanks for your time today, guys. It's been a great session, and I'll see all you guys tomorrow. Have an awesome rest of your day, guys. Bye bye. Ciao.